What is going on, everybody? Welcome into the Tim Warren Show. It is Wednesday, September 10th, and we got some data points here over the last 2 days that make it seem like a rate cut is more than certain. The question is just how high could it get? But with that coming, the people that will come out of the woodworks telling us a crash is about to come based on the history of rate cuts and market crashes. They're going to be very, very loud. Will a crypto crash come, or is this just the beginning of the next major crypto rally? We'll cover all of that and a whole lot more, so do not go anywhere. Stick around to the very end. Smash the like, hit subscribe. I'm going to introduce my team here today. I got Smay, I got Shrum. Boys, how are we feeling today?
Me first?
Go for it.
Tim, I am, I'm out here in Pittsburgh right now, as you guys can see, celebrating a Pittsburgh win on Sunday and looking forward to another Pittsburgh win. Guys, also, Tim, that hat, it really stood out to me, even through these sunglasses, all the way here out in Pittsburgh. Your hat looks incredible, Tim. What is that about?
It's a new hat that we just set up a merch store, timwarrenmerch.com, and hats like this. I'm going to wear some shirts in the future. We got some new merch coming out, so go check out that site. But yeah, nice HODL hat. I think the back side of it has a Bitcoin on it as well. So some cool stuff with new merch we have here. So rocking the new stuff. But Shrum, how you feeling today? How you doing?
Well, I was doing pretty good. We got some news just now that kind of taking me off my game, kind of finding it a little bit tough to focus. Fortunately, we heard about something real violent. Tim, you want to talk a little bit about what just happened, came across the news?
Yeah, I mean, so we have no idea exactly what's going on. Charlie Kirk, for those who do not know, he's a political pundit, a conservative political pundit here in the U.S., and within the last couple of minutes, he's been shot. Video confirming it's not a rumor, and it looks serious. The good news is, sounds like he's in a hospital. That doesn't necessarily mean anything, but pretty crazy. We're not going to get into the details there. We got the rest of the show to talk through. It's crazy, though. And what I want to say about it is, listen, this is a time to kind of stop. You know, a lot of people, one thing I love about this community, we got conservatives in here. We got liberals in here. We have, moderates in here. We have people that love Trump, hate Trump. We have people that are all over the place. Crypto is what brings us together. But no matter what your political thoughts are, violence is not the answer. Murder is not the answer. Discussion, conversation, debate. These are the things that Charlie Kirk's always stood for. Again, do I agree with some things he says? Yes. Do I disagree with other things he says? Yes. But one of the things I've always respected about him is his willingness to take the conversations, the hard conversations that need to be talked about. Yeah, I'm blurred out. Give me a second. The hat messed me up. He took the hard conversations that people need to have, and he had them. And the fact that someone turned to violence, it's sad. So I don't know where you guys are standing in terms of your agreements, disagreements with him, but hopefully we all can be on the same page. This is unacceptable. This should be condemned. I pray for Charlie and his family. I pray for his safety. And if he's not safe, if that was the end of him, I pray for peace. I pray there will be no retaliation. These are the types of things that, he's not a politician, but he's a major figure. Again, love him, hate him, indifferent about him. He's a major figure. This isn't right. And I pray for justice. And I pray that the country will cry out for justice. We live in a world right now. There's some other things that have happened recently. Other school shootings. A woman was murdered on a train in North Carolina. It's just a very sad place we're in right now. So I encourage you guys to pause for a little bit and think about the world we're in. And unfortunately, the reality is I don't think a single person in here would ever condone something like this. The reality is less than 1% of people in this world are the people that act on these crimes. And yet it happens every single day. And, There's a quote that I grew up with that evil will always exist when good men stand by and do nothing, and they say nothing. And that's unfortunately a world we live in, where less than 1% of the people are truly, rudely, down to their core evil. More than 99% of people genuinely want peace and hope, and they just want to provide for their family. And yet, evil is so prevalent. And the reality of that is because it's good people sometimes are silent and don't say things. So, crazy day. Praying for Charlie, praying for the country, praying for people. I'm praying for Republicans and I'm praying for Democrats. I'm praying for socialists and communists, and I'm praying for capitalists. This is crazy. Very crazy stuff. And yet we still have a show to do. Still have to talk crypto. So we're going to move on. I'm going to encourage chat to, if we hear any updates on his, position, sure, put that in chat, but I don't want to spark debates, conversations, unless it's praying for Charlie. Please, 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 chat. Let's not get into a political conversation, whether you agree or disagree with him, because that's not the time for this one at the moment. So there will be a time to have conversation. Right now, probably not the moment for that. I ask you guys to respect that in chat. With that said, got a show to do. Got some stuff to talk about here. Let's take a look at the bubbles. Let's take a look at what's going on here. For the most part, it is a sea of green over here. Pump continues to have a great day. But how about this one over here? AVAX. Some of you guys were lucky enough. You watched my video yesterday where I talked about 3 altcoins that I was really excited about that had amazing potential, and you needed to get in on them before their explosion happened. I talked about Sui, and Sui's had a good day. It's just not necessarily exploding. Talked about Caspa's in a good spot, but AVAX. AVAX was the one I was probably actually most excited about the kind of correlation it had kind of building up below resistance. Well, today, we'll take a look at that here in a couple of minutes. It has shattered that resistance. AVAX up more than 10% in the last 24 hours. You love to see it. Ondo back up over $1. So good stuff happening there. The big reasons why, before we get into the charts, let's discuss, and I'm going to bring Shrum up here in a second. We're going to discuss the big news coming on and then kind of get into the conversation that we kind of introduced. If you come in, you're seeing that title, you're seeing that thumbnail. I saw a comment earlier, this thumbnail scaring me. I will go ahead and let you guys know it is a clickbait title, but the reason for it, the reason I did that is not because I wanted to pull it out of, thin air to scare people. There will legitimately be conversations had in the next week and some change. As we get closer to FOMC, there will be conversations had about the history of rate cuts and what they do to markets. So we're going to have that conversation throughout this show. But let's go and look at the data real quickly as to what is causing chaos in the markets and making people feel just about certain that we're going to get rate cuts. The question is just how much. We'll have that conversation in a second. But today, the US PPI year over year coming in at 2.6%. That's lower than last month, 3.3. That's lower than the forecast prediction of 3.3. What does this mean? Well, while PPI isn't directly the inflation number, it is actually a very important number that we've heard in the past. This is actually what the Fed is looking at. A lot of times when they talk about rising inflation, they're not just looking at the inflation number, they're looking at PPI. So what this means is if it's coming in cold, if it's coming in lower than expected, it's not just inflation's under control, inflation might actually be dropping. And at the same time, of course, recent data has shown us that unemployment is beginning to go back to the upside. What do you do if you're a Federal Reserve member? When you see inflation stay low and unemployment rise, you cut interest rates. That, though, is the question is how much are we going to cut? There was a tweet we put out yesterday on the Tim Warren X account that 50 basis points is seriously on the table. Why? Because 50% less U.S. jobs were added from September 24 to March. I think I'm supposed to say 25. March 25. That is 76,000 overstated jobs per month. Meaning we have a failed numbers. Remember that lady that was just fired a couple of months back for not doing a good job? Well, it turns out we found out more about just how bad of a job she was doing. She pumped the numbers of the job market, making the economy look like from an unemployment standpoint, we were in a very good spot. This, of course, would cause Jerome Powell to think, hey, if unemployment's under control, I really got to focus on this inflation. Let's not cut any rates, right? Well, it turns out unemployment was a problem the entire time. And this has caused people like Bessent. Now, he's not pictured here. You can go ahead and go off my screen. Bessent has come out saying that potentially what we should be looking at is make-up rate cuts. If we had seen how bad the job sector was back in January or February of this year, we might have already had 5 rate cuts, 125 basis points cut at the point today. And then September should take us all the way up to 150 basis points. So Besson, in essence, is saying, hey, Jerome, do your job, slash interest rates by not just 25, by 150 basis points. Shrum, I want to bring you in here. What are your thoughts about this? How likely is it that we get a greater than 25 basis point cut here? What are your thoughts?
You know, Tim, my thoughts have actually been evolving on this because initially we had been talking about this towards the end of last week, when those 50 basis point percentage likelihoods started to move over on Polymarket. A lot of folks in the community were like, wait, are we going to actually see a 50% basis point move? That could be bearish, right? I gave the example of, you know, if your mom's freaking out because you got a cut on your arm or something like that, you bruised yourself, right? You're kind of gauging, you know, how bad is it based on her reaction, right? So the market does the same thing. The market kind of knows something isn't adding up. What's going on with these jobs numbers? Right? If the Federal Reserve is the parent, you don't want to overreact and then scare the child and make panic kind of flow through the market. But that is one way that the market will perceive a 50 basis point cut, and that could be bearish, right? Could be bearish in the short term, could be in the midterm as well. But my thoughts have been evolving. So that was my initial thought on that. But one thing you don't want to count out is the way that Wall Street views Jerome Powell. They really hold up Jerome Powell and the institution of the Federal Reserve with a lot of reverence. We're nestled here in the crypto community, the crypto world, where we kind of grew up knowing that the Federal Reserve sucks. We have no reverence for the Federal Reserve. We understand it's powerful. We understand it's significant, controls the supply of bonds and dollars, but we have no reverence for it. At least I don't. But Wall Street does. And people who have 401ks and their wealth managers have a lot of reverence, a lot of respect for the Federal Reserve. So why do I bring that up? Why does that matter? Because when Jerome Powell gets out there, post a 50 basis point cut, the market may be bracing fearfully, but Jerome Powell again and again and again, especially in moments like these of very great importance, a pivot from quantitative tightening easing or vice versa, he's able to quell the fears, to calm the waters, and bring confidence to the markets. Whether or not he'll be able to do it again, of course, I don't know. But Jerome Powell is very good at doing that, getting behind the mic, getting on camera, and making folks feel better about the fear that the market is feeling. So 50 basis point cut theoretically could send the wrong signals to the market that they're way behind. But people who know and who are invested in Bitcoin already knew that we're way behind. That shouldn't be news to anybody. But it could be news to folks on Wall Street who kind of drink from certain media outlets as if it's the gospel truth. So I don't, and by the way, I actually don't think we get a 50 basis point cut. I think we get a 25, and then they're in September, and then they may kind of ramp it up later in 2025 with I think there's 2 more decisions. Maybe they do 2 more 50 basis point cuts to end out 2025, or maybe they just do 25 and stick with 25 until they get to the terminal rate that they decide, the rate that they want to get it to, and then sit. But yeah, I still think we get 25. If we get 50, it does tend to signal fear. But I do think that Jerome Powell is the man for the job when it comes to calming the markets in that type of a scenario.
Yeah, I think that's good synopsis right there. I'm going to give my thoughts in just a second. I want to go to my screen, though, and let people see what CME is saying right now. Take my face down for just a second here, Smay. It's crazy, actually, after this morning, the chances of only 25 basis points, right, 400 to 425, is increased from 88%, so we're talking about 2%, but increased from 88% to 90.1%, with now a 9.9% probability of a 50 basis point cut. You can go off there and come back to my face, Smay. I'm in agreement with you, Shrum, that I think 25 basis points is probably the thing to look at. The issue, though, is going to be, of course, Jerome Powell and him trying to maybe fight the accusation that he has been a partisan Fed chairman. Of course, last year you saw a slight increase in unemployment, nothing crazy, just a slight increase. And you saw inflation look like it's under control. What does he do with this in August of 2024? He slashes interest rates by 50 basis points, conveniently, right before the election was about to take place. Say with that what you will. Ultimately, people have been accusing him then of being a political figure trying to help the Biden administration to make it look like it's economically a viable thing. And now holding off on rate cuts throughout 2025 is him trying to make Donald Trump look bad. I'm not here to confirm, deny, or say what I believe on that. My point is that is the accusation. He has a good chance here of trying to get back on track of being consistent with his reasoning by looking at rising unemployment and falling/stable inflation. The reasoning is the same once again. So while I predict 25 basis points to be the reality of it, consistency from Jerome Powell and the Fed would actually suggest 50 basis points is the right one. And then, of course, you have Bessent's argument of saying, well, if we had known about these bad numbers back in January, we could have had 5 cuts by now. All of that, of course, though, I think you're right, Shrum. I think we're on the same page. 25 basis points is my prediction, but we will see. I will not be surprised to see 50 basis points cut next week. But for now, 25 is my prediction. I want to save the conversation for what rate cuts mean long-term here in just a couple of minutes. Let's first go take a look at the charts and see what is going on over here. Now, I did not fix this, May. Give me a second. We're fixing on the fly. I forgot to fix this pre-show. I had to change it and something I was doing earlier today. There we go. We're all fixed up. Got it all squared away. You can see the price action there on the right. Bitcoin, of course, had a nice surge here early this morning. If I were to go to the 1-hour chart, you can see that we made a move all the way back up here towards 114,362. Of course, just a couple of short days ago, we were down here at 107,000. So we definitely have changed the short-term trajectory. Right? We were in a bear trend, lower highs and lower lows. We now have several 1-hour higher highs and higher lows. Even more importantly, though, we broke above that 113,500 level we've mentioned on this show several times. Let me take that 4-hour chart. The previous lower high set back here on August 28th was this 113,500. We told you after rejecting on that level twice here in the last 2 weeks, it would be very important for Bitcoin to get above this level. Now, after breaking through, it does look like we're kind of pulling back down here, maybe using this level as support. But if we're right about this, if we do have a sustained breakout because people are bullish anticipating a rate cut, this would now send me back towards my target that I had for Bitcoin to make a move in the next week and some change back above $120,000. We're still riding that Bitcoin daily buy signal with the green reversal, the bullish momentum, and the positive money flow. And now you're starting to see those lower timeframes as well give us that boost at the same time. Are we a little overbought? Yes. But this is something I'll make the same statement about altcoins as well. Earlier today, I was doing VIP trading group. I was doing some live trading with them, and we were talking about AVAX, which I want to show you guys here in just a second as well. But we talked about, if you were to look at AVAX, in fact, actually, for the sake of this, let me go take a look here. A lot of people are going to be really worried about AVAX right now. They're going to look at the RSI being up over 84. The MACD is up to levels we haven't seen since the last kind of major top here for AVAX. You're going to see the Luxago oscillator is giving us a bunch of reversals. And again, we're back up to overbought territories. Does that mean that AVAX, that Bitcoin, that crypto is about to crash colossally? Not necessarily. And the reason for that is because during boring trading sessions, right? So this whole period of time on the 4-hour chart, going back, let's go back to like August 12th to before this breakout on AVAX. Every time the RSI, the oscillators got overextended, you were overbought. It was time for a pullback. Every single time the oscillators got nice and low, you were probably in a good spot to buy. I tell people all the time, even though people like to tune out during boring phases of the markets, if you want to trade and be a day trader, sometimes trading the boring parts of the market are the easiest times to trade because you can literally just buy when the oscillators are low, sell when they're high, look for short positions, and then take profit as oscillators move back down to the downside, right? Very easy trading. The problem is, what happens when you break out and start an extremely bullish rally? I want to show you another period of time when AVAX had a very, very big run, a bullish run. Let's go back to November, right? November of 2024. And I want to put some lines here. Of course, this rallied on the night that they elected Donald Trump as the next president of the United States. I want to take a look between that period and the top here in December, right? So all of this massive bullish movements in this time period on the 4-hour chart. Coincidentally, when I take a look at the oscillators, you're going to see, despite the fact there were no major corrections during the time, we watched the oscillator live in the overbought territory. During major bull movements, these are great buys. Anytime you see the oscillators drop low, that's an amazing time to buy, but it's not always a guarantee that the overbought oscillators themselves bring sell signals. For example, when we first got overextended here on November 6th, you would have looked at this chart and said, oh, that's it. AVAX is overextended. Time to sell. Well, what would have happened if you had sold on November 6th? You would have sold right before a next major rally on AVAX. And my overall point here is to tell you, if we're right that a big move to the upside is coming, if the bulls are going berserk and the bull run is back on us, you're not going to want to be paying attention to 4-hour overbought signals, because they will lead you astray and convince you to sell or short right before the next big run to the upside. And that's what we have happening on Bitcoin's chart. As we break some previous highs of significance and the oscillators are a little overextended, we'll see that across the altcoin space as well. That's my warning to you guys. Don't read too much into lower time frame sell signals. They might not be accurate. What I'm looking for is I'm going to wait until I start to see some overbought daily and maybe even weekly charts. That will be the right time to take profits and to sell before a dip is coming. With that said, I looked at Bitcoin. We quickly looked at AVAX, a more used AVAX chart. How about AVAX yesterday? Who bought in yesterday after our video we put out where we told you it's time to buy before it's too late? AVAX has broken that key resistance trend here around 2650. And if I'm right on my analysis, and it turns out my timing of that video was pretty spot on, the next stop should be resistance in the world of $46 to $48 range. This is a longer time frame falling channel here on AVAX that if we break above that one, we could make a run all the way to 150. That's not something I think that happens in 2025. That's a move I think that comes much later in 2026. But for now, the rest of this year, do not be surprised to see AVAX back up closer to $50 before the end of the year and the next major resistance level. Shout out to AVAX holders out there. HODL your AVAX there. I'm going to take a break from some charts here for just a second. We'll do some more later on the show during some Q&A portion, but this is a good time to bring up a new sponsor that we have here on the Tim Warren channel. If you guys are traders, and we have a massive community of traders, but you get frustrated because you're not trading with a necessarily large account. You're actually pretty good at winning trades, but if you're only trading with like $100 or $500, a 5% win is not that much money. It's really hard to get out of bed. If I was trading with $100 and I had a 5% win, I made $5. Hey, I made some profit, but it doesn't seem like that much. When you hear about these large whales making trades, and this guy over here made $2,000 on a trade, this guy over here made $10,000 on a trade, you're sitting here saying, man, I want to make that much money in one singular trade myself. What they don't tell you is they're not trading 3,000% profits. They're more often doing 5%, 10%, little itty bitty trades. But the difference between them and you is they have capital. 5% of a $100,000 entry would gain me $5,000 profit. Well, if you don't have that $100,000, how do you reap those types of rewards with good technical analysis? It's by using our brand new sponsor, Breakout. This is a prop firm trading company where you can apply right now and get access to a much larger portfolio to trade and have a greater margin. If you sign up with our link down below, you also get 2% off all the fees for signing up. I highly encourage you, if you have been trading successfully, if you're finding success, but you need more capital, prop firms are the way to go, and Breakout is the emerging company that in the crypto realm is perfect for this. Go check them out today. Join our trading group as well to see some of the insights of where we're buying and where we're selling to perfect your trading portfolio. Thank you to Breakout for sponsoring today's show. I want to throw it to Shrum here for a second, and we're going to continue this conversation. We're going to get into some details about the rate cuts themselves, right? I just went on the charts, showed Bitcoin, showed AVAX, showed the bullish potential happening even right now, as it's very much looking like 25 basis points is a lock, 50 basis point cut is potentially on the table. This is going to cause a lot of people to be bullish, Shrum, but there will be an entire camp that will come out of the woodwork and will say, historically, rate cuts and pivots have correlated with crashes in the markets, and people should prepare that the top is in and a massive crypto crash is coming. Before we get into some of those details, I want to kind of throw it to you first. What are your thoughts about people like that? What are your thoughts about the movements right now? Are you bearish about a rate cut, or are you looking at this completely bullish?
Yeah, well, for those of you who are OGs who've been watching our YouTube channel for a long time, you already know this answer because we talk about this every time they cut rates, every time there's a decision. There's fears that it's going to lead to a recession or something like this. Folks, the history is mixed, and Tim's really good at this. He's shown backtest before. It's just not true, right? Sometimes the rate cuts do lead to downside. Other times the rate cuts do not lead to downside. The most recent major rate cut we had was actually this time last year, September 2024. Go back and look at a chart. Did that look like a sell-off to you after a rate cut? So it's mixed. It's a mixed bag when you look back at history. But fundamentally, when you think about what a rate cut is, it makes money cheaper, right? It makes money cheaper. Does that sound like something that's going to be bullish for a market or bearish for a market? It's obviously bullish. Okay. So fundamentally, logically, the way that the world works is that when they cut rates, markets should go higher. Folks take more risk, not less risk. They sell bonds, they buy Microsoft, they buy Bitcoin. Okay. That's the way that this goes. Now, there's all kinds of extenuating circumstances. There's also a very important question that you need to ask. Why are they cutting rates? Okay. That's a very important question to try to figure out. Will the markets go up or will they go down when they start cutting these rates? So that's why we're here, right? To try and figure that out. I think that the market will go higher. Why is that? It's because the market has not rallied into this news cycle yet. It has been tepid. It has been timid. Yes, some names like Oracle yesterday have rallied crazy high, but that's on its own fundamentals. The market in general, stocks and crypto, has been sideways to up, but it hasn't gotten overbought into this news cycle around those cuts. Therefore, it's not priced in. Therefore, we have more upside to go once that cut is confirmed. It's bullish. It's risk on when they announce the cut.
Yeah, let's get into the argument to be made. Let's play some devil's advocate here. Why do people get so bearish during Fed rate cuts and during pivots? The most common dates you're going to hear thrown out as to why you should be afraid are going to be obviously back in the fall of 2007. We began to cut rates in November of 2007 and the markets plummeted. Same thing, we cut rates back in January of 2001 and markets plummeted. We also saw markets plummet in 81. June of 81, we began to cut rates and the stock market plummets. And you're going to hear a lot of people on the internet saying, uh-oh, here we go. Once again, rate cuts are coming, crash incoming, learn your history. To which I would reply to those people, ditto. You learn your history. Learn to study things more than just coincidences. I don't like, I've told you guys before, I don't like when people make arguments like sell in May and walk away. Septembers are historically bearish, so you might as well go ahead and sell in September. For the last coincidences happen. You should not be making investing decisions based off of rhymes or coincidences. What you should be doing is looking at the data, looking at the circumstances, doing your own analysis and not just taking somebody else's word for it, and then make your opinion known. If there's a repeatable event that happens or a repeatable situation that always has a bullish or bearish situation, good. But when it comes to rate cuts, the data is just not there. Let me show you on the charts here for a second some great examples of where this analysis of rate cuts causing crashes is absolutely foolish. Let's start off with the rate cut that happened in March of 2020. Now, of course, people are going to know March 2020. That is when COVID hit the United States like a freight train. Markets crashed, but the rate cuts coming after the crash bottomed out the markets and we resumed. But of course, COVID was a really crazy time. I don't think we should really take too much from COVID situation and say that we know anything about how markets move. So for the sake of argument, let's actually just get rid of the COVID situation in general, even though that was an argument that says rate cuts caused a price rally. You can go further back here. You could go into, I really could probably go into cuts that happened in 18 as well, but let's go all the way back to November of 1990. Markets had been pulling back for a couple of months, but the rate cuts matched the bottom of the S&P 500 and a rally resumed. Same thing when you look at rate cuts in May of 84. Same thing when you look at rate cuts in July/June of 74 as well. What's my overall take here? Study your history. Just because the most recent memory of the massive cuts that happened in 07 and the massive cuts that happened in 2001 were marked with big pullbacks in the stock market, there's just as many, if not more, examples of where rate cuts actually brought on major rallies to the stock market. Now, when it comes to cryptocurrency, we really only have the 2020 example of serious rate cuts to apply. So you can't really even go into crypto and say specifically we know how crypto acts when it comes to rate cuts. The last big significant slash where we dropped in our federal funds rate was back in after 2020, 07, and then here in 01. But the reality is, go off my screen here, you got to go a little bit deeper into why these crashes happened. It's pretty irresponsible. Any analyst out there, and I, no disrespect, but I am speaking to analysts out there that come online, and I believe they're being honest. I believe they're doing their best thing, but I think it's irresponsible to look at correlation as causation, right? Just because rate cuts and crashes happened around the same time, to say that those rate cuts were the causation is irresponsible analysis. Why? Because rate cuts happened that quickly due to crashes, right? It wasn't the rate cut that caused the crash. It was the crash that caused the rate cuts. Why does the Fed cut rates in the first place? They cut it because of their dual mandate. They're constantly worried about inflation not getting out of control, while simultaneously also worrying about unemployment not getting out of control. When you look at the two situations that people like to quote the most, 07 and 01, in both of these situations, unemployment didn't just start to go to the upside, didn't just start to rise a little bit. We saw massive spikes of unemployment. The markets crashed because they saw the doom and gloom coming. And the rate cuts, while they didn't cause it, were used to try to stop as much pain as possible. They're not the cause, they were correlated. Because the situation was so bad, because unemployment was taking off uncontrollably, even the rate cuts couldn't stop the pain that were coming for the markets over the next year. When we do see signs, though, of unemployment slowly rising and yet not being out of control, rate cuts, like back in 2020, like back in 1990, in 1984, and 1974, rate cuts that are responding to a fear of unemployment rather than a reaction to unemployment rising have caused markets to go to the upside. And that's what I want you guys to walk away with this today. Have these arguments ready. Go do your own analysis. Go look and correlate between the federal funds rate. You can find this on here. It's Fed Fund. Let me make sure I get this right. Fed funds. Go to TradingView. Look up Fed funds. Go take a look at some other things you want to look at. Look at the so that's inflation rate right there, but unemployment rate, go look at unrate right there on your trading view, and then go take a look at the S&P 500, correlate the dates, and realize, do your own research, make sure you understand why 2007 crashed and why 01 crashed, instead of just saying, oh, they're right, we cut rates back then and we had a massive crash. That means if we cut rates again, we have to crash again. No, that's not what that means. Now, I will say, if unemployment numbers over the next couple of months begin to increase dramatically, and I'm not talking about ticking up by 0.1% every single month, I'm saying if next month unemployment skyrockets above 5%, then yes, we have a possible situation where we could have a crash in the markets. Why? Because it's the massive unemployment numbers that cause the crash, not the pivot in rates. But hopefully, if done correctly, the rate cut that comes here in just a week, hopefully more than just 25 basis points, and hopefully the more that continue in November and December as well, or excuse me, I think it's October and December, they can prevent that 4.3% unemployment level from getting out of control. We can inject money back into the country. Businesses can borrow money. People can buy homes at less interest rates. And all of a sudden, the stock market goes up, the real estate market goes up, and cryptocurrency prices go up. That's how it actually works, not just this, oh, rate cuts are coming, we must crash. That's just a lie put on the internet based off of coincidences, not based off of actual factual details. So there's my soapbox right there. If you're reading the title, if you're reading the thumbnail, no, rate cuts are not about to cause a massive crash. Quite the opposite. We are going to see a massive boom as institutions buy in on crypto. And that's going to kind of take us into the next part of the show here. Now, what's interesting is the CEO of this company I'm about to read is out here fudding the markets. Jamie Dimon, CEO of JP Morgan, is telling people he thinks we're heading for economic problems. Yet his company, his advisors are telling people that they said that institutional adoption for crypto is still in the early phases. This is a conversation I had just last week where I was explaining how even though Bitcoin is 16 years old, crypto is still young and still new. Why? Because the institutions are just now stumbling upon it. And that's exactly what JP Morgan is backing up right here with this tweet. I want to keep going here, but I want to throw it to you, Shrum, first. Any thoughts from you? We have Jamie Dimon, the CEO, telling us, hey, economic uncertainty coming, we're about to crash. But his company is telling people crypto's in the early stages. What do you do with that information?
Well, they're giving you a little bit of an inside look into what manipulation looks like, right? And
yeah.
If you've been in crypto for a while, you can see through this one. This one doesn't even have any kind of bite at all, right? But this is a very unsophisticated version of the manipulator. So if you ever doubted, you tune into our channel here and you hear Tim talk about the manipulators and Richard Wyckoff's theory of the composite man, you kind of brush that off. Just look at this, right? There's a man who's running a company and he's saying one thing, and then people that he's paying crazy amounts of money and they're earning crazy bonuses are saying the complete opposite, right? So do with that information what you will, but to me, it smells like manipulation. And I'm not surprised because JP Morgan is not only known to do that, and they have every incentive and the means to do it, but they've also been taken to court many times for all kinds of nefarious things that they've been caught doing that cross the line. Now, when we talk about manipulation, the composite man, a lot of that, in fact, most of it is not illegal at all. Manipulating markets, it's not illegal. Okay. In some cases it is though. And JP Morgan and other Wall Street firms of its size have been taken to court and been shown very carefully and very clearly where they cross the line.
Well, at the end of the day, it's the business, because I think Jamie Dimon and JP Morgan have a history of manipulating markets in an illegal fashion. The problem is, with the way it currently works, just do some math. Pretend you're CEO of JP Morgan, a multi-billion-dollar company, right? And you're sitting here saying, okay, I can lie to my customers and I'll buy when I tell them to sell. And the consequences of that is I will benefit and make $100 billion, or let's just say $1 billion. And then the SEC is going to fine me $100 million. Worth it. And that's exactly what happens. It is a business. They have some sort of correlation with the SEC. The fines for manipulating markets, the way JP Morgan does it, need to be a whole lot more strict, because at the end of the day, they're still good business people. They know, they crunch the numbers. If I can benefit 90% more than the fine that I'm going to have to pay, it was worth it. It's called an investment. Pay the SEC $100 million, benefit $1 billion. Easy math to say, let's keep this train going. Ultimately, you guys have said it in the chat. A lot of you guys know this. Jamie Dimon is a liar. And you know what? Jamie Dimon, I'd love to have him come on the show, and I'd love to ask him some questions, ask him some good stuff. He's clearly a very intelligent individual, a very intelligent man, but the record speaks for himself. He's not even ashamed of it. He is a liar. He is classically telling people to do one thing while he is doing the exact opposite. We had a friend, and we're not going to get into any names here because then, of course, people get in trouble. We had a friend, though, who had relationships with people inside the corporate building at JP Morgan who were laughing and telling him it's so crazy he's going public telling people not to buy Bitcoin, and that he would fire employees that buy Bitcoin because he publicly in this compass, we all know he is buying Bitcoin. So you can say it's a rumor, you can say it's a he said, she said, but ultimately we have it on good authority. This man is a liar and he manipulates markets. You can cry about it. You can fuss about it. You can tweet at Jamie Dimon and say mean things to him, or you can learn the game he plays, learn how to play the game, and make money right alongside of him. Because guess what? If there's one thing that man is good at in this world, it is making money. Might not be morals, might not be ethics, but making money, he's good at it. Learn to play his game, and you can make a lot of money as well. Let's take a look at some more bullish stories coming out here. This is another one that was causing some concern. The markets didn't really react to this in a negative way, but there were recent unrest. There's recent unrest between India and the United States, but today it looks like that is being calmed down. President Trump announced that U.S. and India are continuing trade negotiations. He called the Prime Minister of India his friend in a message. And of course, that's a very classic move for Trump to make, where 1 minute he says the guy's his friend, then he talks about how dumb the person is, and then 2 weeks later, that person is very smart and his friend once again. It's all a big show here for Trump. But ultimately, this is good news to anyone with lasting inflation fears, as one of the largest countries in the world with one of the largest economies, and that is India, is once again having good trade negotiations with the United States. Hopefully, this continues to bring down the fear of inflation, matching the rise in unemployment and causing more and more rate cuts to happen from the Fed. Shrum, any thoughts on this one? Pretty open and shut, in my opinion, but I'll leave it open for you to make a comment.
Yeah, well, this should just kind of serve to illustrate for you all, how the news cycles change, right? Because I remember not too long ago, I'm old enough to remember that back in June of this year, everything was about tariffs. Tariffs had folks trembling alongside their portfolios, worrying, is everything in my portfolio something I should sell? Should I go into dollars? These tariffs are going to be so terrible for the economy. Well, were they? Were they? But it is refreshing to see some more headlines around trade come about, because we know, I think more than anything, that Trump still has many cards in that regard, right? There were headlines popping up every day, every week about tariffs, about trade. Some of them were bullish, some of them were bearish, some of them moved the markets, some of them the markets just completely ignored, and entire memes popped up, the taco trade around Trump, right? And all of that is in the rearview mirror. But this headline should serve to remind folks that very quickly, if Donald Trump wants to make the markets about tariffs and trade again, he can, right? There will be traders who are immune to that, of course, right? But he can just ramp it up, ratchet it up. And if it's not going to be tariffs and trade, there'll be some other angle, some other point of leverage that Donald Trump will be able to have on investors, whether it be fear or greed. So while this is a bit of a milquetoast, a bit of a Manila headline, just kind of saying trade relations are on the rise, talks are going well between India and the U.S., right? It's a reminder that Donald Trump, when he wants, can grab the markets by the horns and have the markets do what he wants. Not for a long time, but for a time that matters and brings the right people pain, he can make the markets submit to his authority. And he is the president after all. So that's a kind reminder that this headline kind of brings to my mind. I don't know if that made sense for you, Tim.
Yeah, it makes sense. That's a good way of putting it. One last story, then we're going to get into some Q&A here. A lot of question in chat. Someone's asking us to look at the Bitcoin dominance chart because they say it's pumping. It's up. I don't know if I'd call it pumping. It's not concerning me just yet. But last story here on an altcoin that a lot of us here love, some of us here hate. It's okay. We got to report the news here. Breaking: Grayscale's SEC filing on shows. That's weird wording right there. Cardano's ETF, dollar symbol, got a final decision expected by late October. These ETF decisions keep getting pushed back, but there's high belief that Cardano will be another ETF approved. This is just one more reason why we continue, despite the fact that Cardano maintains a lesser than $1 price action. I still believe big moves are coming for Cardano. I still think that team is working on a lot. And this is good news that institutions still have a whole lot of interest in getting their hands on Cardano and seeing those price actions go to the upside. Shrum, any thoughts from you before we get into some of this questions, some of the answers people are looking for?
Yeah, I think we're going to have to fire the intern that wrote that tweet. That was not good. But it looks like the Litecoin account, for those of you who've been tracking that inside baseball, the Litecoin account just announced that it fired its intern that got into a spat with famed analyst Ben Cohen. So
did they actually announce that? I missed that.
Many interns
No way.
that are. It's true. That's a true fact.
I
No,
feel like the firing the intern line is literally the we made a mistake. Let's get a scapegoat. Because how are you actually going to find out who unless I see some paperwork saying an intern was fired, I don't know if I believe tweets from Litecoin anymore.
Right. But okay, so Cardano getting an ETF, big deal, very, very predictable, right? I would have been surprised if Cardano wasn't getting a spot ETF, but Dogecoin was, right? Now, Solana's ETF was actually delayed today, the decision, but this is a big catalyst for altcoin season that is kind of building up. Now, the SEC isn't delaying these for the same reason that Gary Gensler's SEC was delaying their approval of the spot Bitcoin and Ethereum ETF. Their delays were maniacal. We'll just put it in that category. Maniacal under Gary Gensler. Under Paul Atkins, the current SEC chair, we can assume that they're actually doing a lot of due diligence and that the timing here is much more premeditated and calculated based on, I'm not exactly sure what it's based on, but more than likely the Clarity Act. So when the Clarity Act is passed, that's going to be the elected officials up in Capitol Hill, known as senators and representatives in the House, that they have come together, reached a consensus on the way that the market structure should be formed for crypto in these United States. And then the SEC says, okay, that's how we want to do it. And then they go and enforce. That's not the way that Gary Gensler ruled. He didn't really seem to care too much what Congress thought or had to say about crypto. He just did what he did. But this ETF headline here from Bitwise kind of illustrates, most importantly, when, right? Which in markets is super important. The timing. End of October, be paying attention to altcoins. We always pay attention to altcoins, but towards the mid-October and end of October, we could be seeing a flurry of acceptances and going lives of these crypto ETFs for the big blue caps, Cardano, Solana, on down the line. So I'm excited for that, and I know that Cardano holders are too.
Swiper no swiping makes a very good observation as well about our intern's post here. Is it Grayscale or Bitwise? Because the picture says Bitwise and the post says Grayscale.
Yeah, that intern is going to be absolutely taken out to the field and fired in the field. All
right, good stuff here. Let's get into some questions. There was one asked a little bit ago from Nafal Alisha. He said, Tim, can you please look at Bitcoin dominance? It is pumping. It's definitely up. Let's go to my screen here, Smay. It's definitely up from this morning, I guess, or from yesterday, where it did drop all the way back down to 58%. Now it's back up to 58.4. However, you can see here that Bitcoin dominance has been consolidating since the lows back on August 24th. Ultimately, this is creating what we would call a bear flag once again, depending on what time frame you look at. Let's look at the 4-hour chart, for example. Clearly, we have a little bit of a rising support level, right? So we bounced on a rising support level, but at the same time, we're also kind of tracking a little bit of a rising resistance level. Connected with an explosive move to the downside, what this ultimately means is a bear flag still has the chance to make a major correction, dropping as low as 56%. Let's just watch this. If we end up breaking this resistance level and heading back up, let's have a different conversation. But right now, what I'm watching is what we call a consolidation on Bitcoin dominance. Not a major pump, not a major dump. It's consolidating. It's consolidating in what's called a rising channel attached to an explosive downward move, which makes, once again, what we call a bear flag. We'll monitor this over the next couple of days, but at the moment, it's not really freaking me out. Another reason it's not really freaking me out is because we're seeing today as Bitcoin is only up 1.72%, right? So Bitcoin's up today, but nothing crazy. You have coins like AVAX, which is up 10%. You have Ondo up almost 6%. You have, let's see, some other big gainers here today. There's several coins that are up pretty large, even amongst the top gainers. Plume is up 12.7%. By the way, one of our other coins we love here on the channel. We think it's going to have a bright future. The big reason that we see Bitcoin dominance kind of hovering is really because you have coins like XRP only up 1%, Solana only up 2%, Ethereum only up 0.25%. That's it. That's all it's up. The coins are going to have the biggest change on Bitcoin dominance are going to be the next three largest cryptos, Ethereum, XRP, and Solana. And because they're not having massive pumps, yes, Ondo is, yes, AVAX is, Link's been doing this thing recently, but those ones where if they gain $5 billion, that's absolutely massive to their market cap. That's nothing compared to Bitcoin. That's not really much of anything compared to Ethereum or XRP either, with these coins having hundreds of billions of dollars of market cap. We need to see the larger ones kind of have good moves before we have, a lot of talk about major drops in Bitcoin dominance. What I'll say about Ethereum, however, though, and I was actually recording a video with Paul Barron on his channel. I think that actually might be out right now. So after this is over, you can check out Paul Barron's show. Great friend of the channel. Love doing things with Paul. Ethereum currently is in a symmetrical triangle pattern. Where you want to draw resistance, be my guest. But what we ultimately see is a nice resurgence where a lot of coins have already touched their daily smart trails after the sell signal that came in back here. You had one on August 15th. You had another one here around August 25th. Ethereum got really not anywhere close to its smart trail on that daily chart, showing the bulls are really in control. But while other altcoins have been rallying, Ethereum continues to kind of just consolidate within this symmetrical triangle, despite the fact that they're setting historical records for locked or staked Ethereum. The fact that institutions in Wales are buying it over the counter in bulk, preparing for a major rally. What I'm looking at is Ethereum is setting up a major spring. It's not doing anything crazy right now. The whales are keeping the price low to keep retail investors like you and me out, making us bored and us saying, ETH chart's not doing anything. I'm going to go pay attention to AVAX. I'm going to go pay attention to Ondo. I'm going to go pay attention to Cardano. Don't pay attention to Ethereum. The chart's not doing anything, right? Remember we talked about Jamie Dimon telling you to do one thing so he can do the other? Don't look over here. Don't look at the ETH chart, everybody. Don't buy ETH. It's boring. So that I can buy more of it myself before the next big explosion in price. That's what it is. This bull pattern, if it works out the way it could, this is a bull pennant. We could see the price of Ethereum explode here and go all the way over $6,000. We had a target of $6,000 a couple weeks ago. This target is now saying $6,300 on the next breakout for Ethereum is what that means. Great fundamentals, great news, boring chart equals buy, and you're buying early, in my opinion. Don't fade ETH. Don't sleep on ETH. People way smarter than me and probably smarter than a lot of you. I don't know. There's some people in our chat that are probably the highest IQ people in the world. But there's people way smarter than us that are accumulating this like it is going to go berserk here very soon. And I tend to believe them. I'm not fading ETH whatsoever. So that's what we're kind of watching right there. That's what I'm still bullish on when the ETH chart and Bitcoin dominance. Again, this whole thing came from Bitcoin dominance. Why I'm not freaking about a Bitcoin dominance? Because we're ranging, and ultimately the largest contributor to this Bitcoin dominance chart falling will be when this ETH chart explodes to the upside, and I think it's coming very soon. Okay? Let me know in chat if you guys disagree. Ben Cowan has everyone scared. To be fair, Ben Cowan scares a lot of people just because, and that's not an insult to him. He's so intelligent, he scares people a lot of times. He's a ETH fan, though. I'm pretty sure. Ben Cowan, I think his current, last I checked, maybe he changed his opinion. Ben Cowan is kind of like a BEETH meaning Bitcoin and ETH maxi. He thinks like those are the only two good altcoins, the only two coins out there. Everything else is going to fall to zero. Ben will tell you himself. He's not right about everything. I disagree with him on a lot of things. I agree with him when it comes to Bitcoin, and I agree with him when it comes to Ethereum. Where we disagree is I think the other altcoins are going to explode as well. He seems to be more of a BEETH maxi, Bitcoin and Ethereum. To be fair, I think Tom Lee is kind of like that as well. He's a Bitcoin and ETH guy. Shrum, you have a thought there?
No, it's just funny. It's just funny. I haven't heard that before. A BEETH maxi. I think you did you coin that?
Slipped out. It was not on purpose, but it's ended up being better than I thought.
Wow. So you called Plume, you called Chainlink, and now you're coining major fundamental bedrock phrases in the crypto space.
I live a busy life. I got to do a lot of things with my time here. But let's get one more question here, and then we got to wrap up with some Mood Madness updates. Less people here today, but I know, it sounds even wrong to say competing because it's not about competing at this. Like, there are days and times where things are bigger than crypto. Obviously, if you guys are just joining, it's been a weird show so far. I'm going to tell you guys, it's not probably been our best show, but mostly because it's very clear we've been distracted. I mean, literally we're getting our last minute preparations for the show, and that breaking news about Charlie Kirk hits. And it's news that, I don't know Charlie. We've never met Charlie. All we know about him is the same stuff you know about him, what he says on the internet, but he seems to be if nothing else, a man of God, a person I respect, even if I don't always agree with. And it's truly sad and heartbreaking to hear. I think the updates I did see, it's pretty evident. We were debating if he got shot in the chest or the neck. It's pretty clear he got shot in the neck. There's a lot of blood in the photo that I saw. So I'm praying for the best. I'm praying for a miracle, and that's what I'm seeing on the internet as well. It's Charlie Kirk's going to need a miracle. But you know what? I believe in miracles. I believe in a God who performs miracles. People have recovered from way worse than a shot to the neck and lived to give glory to God. And I think Charlie's the type of person, and I think his family's the type of people that whether he survives this or not, God will be given glory one way or the other. And so it's been a distraction for the show today. We apologize if it seemed off, but that is why. One more question, and then we'll wrap it up here. It's so hard because even like the Moon Madness is such a lighthearted thing. We love to have fun here. Like, we're serious. We want to help you guys. It is so hard, though, when we have fun things planned to have fun in light of things like what happened here today, but we're going to keep trying. There's Felix in chat. Love Felix. Stop fudding Tim. I apologize, Felix. I'll do better. Let's see. David Middleton said ETH didn't pump until like 6 months after the ETF. What's bullish about that? We got time. I'm up over 100% on most of my coin right now. I'd rather book a little profit. It didn't do it, but that had a lot more to do with timing more than anything else. I think people, we kind of even said it here. We told people not to get overly bullish on ETH when the ETF came out, because a lot of people kind of went out there and said, oh, did you see what Bitcoin did when its ETF came out? Yeah, Bitcoin's ETF didn't come out during a time period where people were really worried about the future of the economy. ETH caught a bad break with their time period. There was a lot of fear and concern about where the future of the world was getting when ETH's ETF was. There's a lot of optimism when Bitcoin's ETF comes out. I don't hold the timing of ETH's ETF or the fact that it dropped for 6 months afterwards against Ethereum. And clearly, the institutions and the whales don't hold it against them either, because, again, like I said, on-chain data shows people are buying Ethereum and staking it like it's going out of sale, going out of business soon, and you got to get as much as you can when you can. Felix, I just don't get why you're always saying it's going to crash. Felix, I don't always say it's going to crash. We sometimes have titles, and titles don't say the whole story. But thank you again for being here, Felix. We love having you here. Quick update on where we are with round 2 of the Moon Madness. Let's go to my screen here. Not surprising whatsoever. Oh, see, that's actually today's thing. Give me just a second. Go off my screen for a second. I got to go to my bookmarks. There we go. Let's look at how Monday closed out, and then we'll take a look at today's here as well. Oh, technically, they still have 10 minutes left. We'll go to my screen again here, and we'll look at this. It looks like early stages. Monday's poll, again, 11 minutes left, so you guys want to go sway this. Go vote on Tim Warren Trades on X. H-bar is going to handsomely beat ENA. Pretty much what we thought there. ETH going to handsomely beat Hype. And it looks like Sui is going to just absolutely crush Uni, Ethan Hype as well. Today, the fresh one's up there. This is going to be interesting, guys. This already 113 votes, even though we just put it up here about an hour ago. Link versus Caspa. Of course, Caspa with the surprise victory over XRP in round 1. But they got a different beast of Chainlink. It's one of the hottest altcoins out there right now. There's not a lot of haters of Chainlink anymore. Maybe just haters of me with my price predictions on it. But most people realize Chainlink's going to be special. So will Caspa repeat, or does the Cinderella story end here for Caspa? Go vote. Let your voice be heard. We got about 2 days. We have 2 days there. We'll find out the results on Friday. Arbitrum and Doge in an early battle. Only 67 votes, but pretty tight race there. And then, of course, my Cinderella, Tau, is at the moment beating XMR, Monero, but we got a lot of time left. Make sure, go vote on those if you want your opinion to be heard. That's going to wrap up today's video here, guys. Today's show. A lot of crazy stuff happening here. Ultimately, though, if you came for crypto, if you came for the markets, if you have any concern that we will see a crash due to rate cuts, if you didn't watch the whole video, go back and watch it again. It'll help you a lot. But in a nutshell, no. Study your history. Study the details. Don't have correlation be causation. Don't take convenient truths on the surface. Do your own research. Study for yourself, and you will find The situation we're stumbling into next week with an FOMC meeting and rate cuts coming this time is going to be bullish, and the bull market is far from over. We love you guys. We'll see you Friday. Have a great day. Adios.